Hello there. Welcome to The Open right here on BNN Bloomberg. I'm Andrew Bell. Let's get to the big stories we're bringing you from our newsroom. Technology firm CGI says it has sealed a deal to acquire Stratfield Consulting in Atlanta, a key U.S. growth market. Stratfield specializes in digital engineering, product development, and tech consulting. Montreal-based CGI says the deal will expand its presence in Atlanta to nearly 600 consultants. Terms weren't disclosed. And real estate management specialist Colliers has acquired Ramos Consulting Services. Ramos is based in California and provides management and engineering services for major public transit projects. Under the deal, senior leadership at Ramos will continue to oversee the transit business in California and also become significant shareholders in Colliers Engineering. Shares in the fast food provider Yum Brands are down slightly in the pre-market. Yum just report mixed fourth quarter results, with strength at Taco Bell and KFC offset by continued weakness at Pizza Hut. Same-store sales beat expectations as diners lean towards value meals, though adjusted earnings came in slightly below forecasts. Company says global unit growth and digital sales remain key drivers. You can see that the broad U.S. market looks like it'll open flat, although the tech-heavy NASDAQ is set for a decline today. We did see major selling in software and IT services stocks yesterday amid fears that AI is making inroads into that business relentlessly. Let's check out oil prices now. Amid hopes that the U.S. and Iran won't start exchanging blows again. And you can see oil under a little bit of pressure right now. And let's check in on gold, because it did rebound this morning and we saw prices above that 5,000. It's holding above that level, but still down from those record highs of $5,500 US an ounce for gold last week. And let's have a look at the loonie. Our dollar slightly down against the U.S. currency, but it has rallied over the past few weeks. And finally, Bitcoin. We saw yet more selling in the biggest crypto today. We still got that spotlight on earnings season. Uber actually missed on profits. Advanced Micro also saw some pressure. And of course, software. There's a cloud over that sector. We're joined by Nancy Daoud, Private Wealth Advisor at Ameriprise Financial. Nancy, thanks very much indeed for joining us.
Thank you.
Start off with these software stocks. Adobe down again in the pre-market after a nasty sell-off yesterday. And we saw stocks like Thomson Reuters. It does look as though people are worried that these AI tools will reduce the need for traditional software.
We had a very strong month of January, and we all say, as January goes, so does the rest of the year. And it's true that there has been some pressure on technology, but that's very much expected. We are in the very, very first wave of this AI boom. We've got a ways to go, and we still don't know what the outcomes will be, but it looks pretty positive so far. So with that, we expect 2026 to be very similar to 2025 with a lot of the ups and downs, but ultimately up. That's the technology story. If you're in technology stocks, stay the course, and it's going to be a little bit of a ride. It may not be a decade, but it certainly won't be weeks or months. We're still in the very first wave of all of this.
What earnings so far in the U.S. seem pretty strong this season?
That is true. The story is all about earnings. 75% of companies reported better than expected earnings, so that we can't get better than that. And the underlying fundamentals are very, very strong. I think that earnings will continue to be the spotlight for what we project in the future, because ultimately that is the deal. The profit and loss statement is the deal when it comes to stocks. So I'm glad that that is the focus now versus all this other extraneous stuff that ultimately doesn't matter.
Yeah, it's interesting. Earnings and, by extension, dividends are really what are the reason to own equities.
That's absolutely correct. And we are very much pro overweighting on value stocks, large cap value, mid cap value. Those dividends will help offset a lot of that volatility that's expected, as it did last year. So this would be a good way to just head to mitigate the roller coaster ride that could happen with technology.
I'm not sure if you mentioned this yet, but banks. We are getting deregulation from the administration of President Trump. And would you favor the big money center banks right now?
Oh, yes. Financials are very much in favor. We haven't really gotten the big effect of the OBBB yet, which is just beginning. And I think financials are positioned to do very, very well, mainly because of the deregulation that you just mentioned. And this is always a very big good news for financial stocks.
We've had 3 years of double-digit returns for investors. Is it too much to hope for another strong year in 2026?
Well, I've been around for a very, very long time, in 4 decades, and there may be some turbulence along the way, but the trend is always up. So there's never an end to the up market. You just have to stay the course during those turbulent times. But ultimately, yes, I think we still have a great deal more upside. Like I said, we're still at the very, very beginning of this AI boom, and it'll have some challenges, and there will be some turbulence, but ultimately the trend will be up. So if you're not in it, get in, and if you're in it, stay the course and make sure you have a good appetite for risk and volatility.
Is there a risk, do you think, that foreign investors will pull back from the US market, though, because of the unpredictability of the current administration?
Well, I always say keep politics out of your investment portfolio, because ultimately that, and regardless of which administration is in office, it's ultimately all about balance sheets and earnings. And in the end, even with Western Europe, money will talk.
It is interesting, yeah. But I mean, I know it does touch on politics, but I wonder if foreign investors do think, well, we just don't know which way Washington is going to jump these days. Will they cut their allocations to US stocks?
Well, again, this is so unpredictable, and there will always be statements made, reactions, but then ultimately things fall into place, and that's actually been the pattern of this administration. There's some very big announcement made that causes a great deal of controversy and emotion. And then, a few days, sometimes even overnight or a week later, everything reverts to the mean again, because now we've got some real conversations going on and some negotiations taking place. So at first it was shocking, but now it's become sort of the norm with the administration. So it's what's expected.
Mm-hmm. And just leave us with a final thought. When you talk to clients, what's the number one thing on their mind these days, Nancy?
Well, I would say managing expectations, because human behavior, people tend to think, well, we've had, as you said before, 3 years of double-digit returns. Now that becomes sort of like that's what's expected. And I think that it's really important to manage expectations, especially appetite for risk, and be cognizant of what your goals are, and more importantly, what the time frame of your goals are. So if you have near-term goals that you need to use your money for, that's probably a good time to take it off the table and out of the market, because we don't know what the short term brings. Longer term perspectives are great, but in the short term, if you need cash or if there are income needs, they are consistently and should be accounted for in the now while the going's good.
Nancy, thank you very much indeed. Really appreciate it. And Nancy Daoud.
Thank you for having me.
Private wealth advisor at Ameriprise Financial. Coming up, Canadian officials in South Korea strengthening ties and exploring trade. And that comes as conglomerate Hanwha pitches its submarines for the Canadian military. We'll find out more after the break. Canadians are in South Korea, strengthening ties and exploring trade. And that comes as the conglomerate Hanwha pitches its submarines for the Canadian military and eyes broader defense and economic partnerships. CTV's Judy Trin has more in this report.
The South Koreans showing the federal government's point man on defense procurement what more could be made in Canada. Hanwha says the howitzer armored vehicles used by some European forces and needed by Canadian soldiers could be made by auto workers in Ontario facing job losses.
The manufacturing automated lines that we have now, we could take that here and use the technology that we have and implement that in Canada for the development of these vehicles.
Hanwha did something similar in Australia. It built a factory outside Melbourne after Ford and Toyota shuttered their plants.
Given the moment that we're in, everything's on the table. So, we're not, we're looking at all the opportunities that we can get our hands on.
Hanwha is considering linking the howitzers to its bid to build up to a dozen submarines for the Royal Canadian Navy. One of its partners is also pitching building the torpedoes that go in the KSS-3 sub in Canada. The country's top naval commander says Korean soldiers will help train Canadians, and trade will strengthen ties between old allies.
Secretary Pugh.
As the Secretary Fuhr and Ministry of National Defense An has mentioned, Canadian forces deployed more than 26,000 personnel into the Korean War. And the Korean people do not forget the sacrifices that the Canadian forces had during the Korean War. Korean citizens are always thankful for this.
After meeting with Hanwha, Secretary of State Stephen Fuhr will meet with Hyundai in South Korea, all before the federal government releases its new national auto strategy.
Coming up, the CEOs of Foreign Mining and Eldorado Gold. That's after Eldorado's deal to acquire Foran for more than $3 billion. We'll be right back. Okay, so we heard from the CEOs of Foran Mining and Eldorado. That's after news that the latter company is acquiring Foran Mining in a deal valued at well over $3 billion. We're going to have that shortly. But first, the federal government is set to release a new auto strategy aimed at boosting Canadian-built vehicles, improving market access, and increasing electric vehicles on the road. CTV's Abigail Beeman filed this report.
The auto strategy coming this week.
Bringing back incentives for buying EVs was not in the last budget, but heading into cabinet, ministers wouldn't rule it out as part of the new auto strategy.
We'll have more news on that to come.
Yep. So it sounds like you're bringing it back.
We'll have more news on that to come.
The auto strategy is being worked on, and these are different conversations we're having.
The industry minister also wouldn't say what will happen to the EV mandate, currently on pause. Sources tell CTV News the new strategy is expected Thursday. Melanie Joly said workers impacted by the loss of the third shift at the GM plant in Oshawa are at the core of new investments.
It's important because we know our auto workers are right now feeling the brunt of the U.S. unjustified and unjustifiable tariffs.
Industry experts say it's not just the uncertainty of American tariffs that hurt, but a lack of information about the deal to allow 49,000 Chinese EVs into the market, made during the Prime Minister's trip to Beijing.
So we don't know what the parameters of that are, the guardrails around that are. So as opposed to more uncertainty, we need an auto strategy that provides certainty.
And industry hopes something to boost demand after a focus on supply.
The government have not done enough on the demand side. So on the demand side, we actually went backward.
Incentives are important because today the current regime is to mandate the production side of it and to punish producers who don't achieve a certain percentage.
Industry experts predict big changes coming to the EV mandate when the new auto strategy is rolled out, and are hoping it will allow industry to target Canadian demand after being hammered by White House tariffs.
All those electric vehicles will require copper. Eldorado Gold is buying a copper producer, or near-term copper producer, called Foran Mining in a deal valued at $3.8 billion. The new company will have 2 projects set to come online in the next year. We spoke with George Burns, CEO of Eldorado Gold, and Dan Morrison, CEO of Foran Mining.
We're in the midst of getting our Skouries operation in Greece ramped up. It's a fantastic asset. This asset's going to produce about 140,000 ounces of gold a year over a 20-year mine life. It has a substantial amount of copper. The copper byproduct will pay all the operating and sustaining costs. So you can kind of take the gold production off this asset, multiply it by your gold price assumption, and that's roughly going to give you the cash flow that will come out of this asset. So for us, you know, we're a growing mid-cap gold company. We've got a re-rate coming this year as we bring this fantastic project into production. But as we were looking at our strategy going forward, and we took a look at Foran and where they are, and just about the same space and time, they're going to be bringing their project into production this year. So our 2 projects are in step with one another. And from a strategic perspective, Eldorado is looking at our cash flow and production is going to be dominantly in Greece as we get this Skouries project up and running. And so the idea of bringing in a similar, very large, multi-decade asset into our portfolio at the same time rebalances our cash flow and production. And, you know, the bottom line is we see both of these being multi-decade operations. Timing-wise, some have asked, well, why don't you wait 6-9 months, get your project to nameplate production, get the re-rate, and then consider this? Well, these assets don't sit around all that long, and you know the concern would be it's not available in 9 months, and it is very hard to find an asset like Foran has. It's got massive upside. They have the Tesla zone.
Sorry, I cut you off there, George, because I want to let Dan get a word in here. Dan Morrison, CEO of Foran Mining. Why do you think this was the time, Dan? Because, of course, you do have this big mine in Saskatchewan. You're set to ramp up. Presumably, your stock would get an inflated multiple if and when it goes well. Why did you decide, or a bigger multiple, why did you decide to sell out now?
Yeah, sure. And firstly, thank you again for having me. So, you know, we don't really see it as selling out. We see it as combining. And yes, we are going to have a fantastic re-rate and bigger multiple, as you said, as our ramp up goes well, which it is. We're currently in wet commissioning. And that's great. Having one is great, one big ramp up and re-rate. But I'll tell you what's even greater is having 2. And the Skouries mine in Greece is just an exceptional asset, and what the company under George have done and how they've developed it is really, really special. So we're very, very confident in their ramp up as they are in ours. So, you know, this is going to be a classic case of where you combine the companies, you get that scale, and it's a 1 + 1 = 3. So very, very excited and grateful to be a part of the company.
And of course, you have gotten the nod from the federal government. They considered you or suggested you for referral to that so-called Major Projects Office, which would try to facilitate your development. Has that office taken on your project? Are they backing it?
Yes, and there is no change with that. They're still very, very supportive of the project, and are helping us with the phase 2 expansion and how they can be involved and support there. And, having El Dorado and the combined company behind the phase 2 is a wonderful thing, because what that will do is it'll actually accelerate the phase 2 expansion. So it'll actually speed up the production of critical minerals in Canada. And it's so it's a great thing all round for Canada and for shareholders.
George, can we loop back to you? You did address this partially, but analysts saying investors may have misgivings here because you're now going to have 2 ramp-up projects on your hands, and we know mines are an enormous technical achievement, but there are often glitches, and we have seen your stock drifting down in the wake of the announcement.
Well, Dan and I are busy meeting with shareholders to explain the industrial logic here. In terms of the risk, the risk is nearly eliminated. Both of us have deployed the capital. Both of our underground mines are up and running. We've done 2 test stopes on our underground. The open pit, that'll be the bulk of the feed to our plant. We've got a crew working 24/7. We've got a large stockpile out in front of the mill. The infill drilling we've done in the first 3 years of mining is confirmed our modeling, in fact, slightly better. And so the mining's de-risked. The plant's nearly complete. There's no chance of a capital blowout here. So yeah, there's the normal ramp-up commissioning issues, but these are small risks. And I've got a great team in Greece that I'm confident will ramp this up smoothly to nameplate by the end of this year. And as we did our due diligence on Dan's asset, it's in a similar position, and they're using G Mining Services, who we're very familiar with on the construction. They're doing an excellent job for them. G Mining Services built the Tocantins mine in Brazil. This is an asset we sold to G Mining Ventures, and they built that mine on our budget from our feasibility study, slightly ahead of our schedule after COVID. And I found that to be remarkable. Our shareholders got the reward of their excellent work. And so we're confident in that company's ability to construct a project with a smooth ramp up. They've done it for several of our peers over the last 4 or 5 years. And we're so confident about it, we have them working for us on our Perama Hill project. So they've been doing engineering work to support the EIA we submitted in December, and we're going to use them to construct the Perama project in Greece. Hopefully, we'll begin to start construction on that next year if we can get the EIA approved this year. So I'm comfortable with it.
Let's take a look at U.S. equity futures as we count down to the opening bells. We did get that big sell-off in data stocks yesterday, and it looks like we might see more pressure on some of the software names today. Of course, the fears of AI incursion are worrying investors. And Eli Lilly up sharply in the pre-market. It projected sales that beat expectations. We got the opening bells next. Opening bell at the Nasdaq is being rung by VenHub Global, and they are a supplier of automated stores. They're really giant vending machines, and we're going to be seeing more and more of those as people try to avoid employing human beings. At the NYSE, Citi is celebrating Black History Month, and at the TSX, it's Global X Investments Canada. It's time for the first 50. And let's check in on the North American benchmarks as we get going on this Wednesday morning. You can see the TSX moving up in early trading. We'll check out gold in a bit, but of course, gold has pushed above $5,000 US again, still down from that spike of last week. So where are we? 32,541. Still down from just over 33,000 on Wednesday of last week for the TSX Composite. The S&P 500 edging higher as well, but the Nasdaq under pressure. And we'll have more on that giant sell-off in software stocks yesterday later on the show. Some stocks that are on our radar. Brookfield Asset Management is naming Connor Teskey as CEO, ending Bruce Flatt's long run atop the asset manager. Interesting that Brookfield Asset Management stock is down in the past year. Flatt stays on, though, as chair of the board, and he continues to serve as CEO of the parent company, Brookfield. Distributable earnings per share at Brookfield Asset Management coming in at 47 cents in the latest quarter, up from 40 cents a year ago and beating the estimate by about 4 cents. Suncor coming out with its fourth quarter results. Raymond James says there was a modest cash flow beat. The stock up right now. The volume, production volume hitting a record, but that had been announced already. Refining utilization was impressive, Raymond James, at 108%, new quarterly record. And so it looks like the investors like the look of that stock, those results. Fund flow per share, cash flow, coming in about 2% higher than consensus. And Colliers, now we think of them, of course, as a real estate specialist, but they are diversified. They're into real estate services, sure, but also engineering and investment management. They announced this acquisition. Ramos Consulting, California-based provider of construction management and engineering services to public transit. And just yesterday, they announced a huge acquisition in Spain, IESA Engineering, a multidiscipline engineering company based in Seville, Spain. It works across 4 continents, and the price for that deal, about $700 million US. Let's check out some stocks south of the border. We're joined by Jeff Morgan, Deputy Team Leader for the Bloomberg News Equities team. Jeff, thanks very much for coming on the show as ever. Update us on AMD, the chip maker, please.
Yes, AMD was one of the worst performing stocks in the pre-market session, and it looks like it's going to be the worst performing, or one of the worst performing, in regular trading here today. Right now, it's down 12% on my screen. Now, what we're seeing here is another one of these companies that is suffering from high expectations going into the quarter. If you look at the actual results, you had a fourth quarter beat, and they actually raised expectations for the year. But once again, these expectations were just so high coming in here. And they have been high for chip stocks and for semiconductors and everybody in the, in the hardware and the equipment space. So what we're seeing is largely analysts wanted more. They wanted a higher raise in terms of the guidance for the year, and they didn't get it today. So the stock is selling off quite sharply. As I mentioned, one of the worst performing stocks in the S&P 500. We have seen this with a handful of these names in this equipment, chip, semiconductor space. Over the course of earnings season, definitely worth watching this one today.
We Lilly sees surging sales, but Novo Nordisk stock tanking. It was down almost 20% in Danish trading because Novo Nordisk warned of growing competition in the obesity drug market.
Yes, and perhaps Novo Nordisk was actually warning about Eli Lilly, because the two results from these two different weight loss drug companies are quite stark. Eli Lilly is jumping this morning, and they've actually jumped over the $1 trillion market capitalization mark as a result of today's big move higher. 8.8% is what I'm seeing right now. It was one of the top performers in the S&P in the pre-market session. Looks like it's going to be that way over the regular trading today. Yes, they came out this morning with an upbeat sales forecast. They see growth. And as you mentioned, Novo Nordisk sees a decline, and that's why we're seeing such kind of diverging outcomes from these two companies today.
And JP Morgan thinks the market is being too hard on these software stocks.
JP Morgan does think that. They were out with a note this morning saying that the software stocks are now in an environment where they're not just, quote, guilty until proven innocent, but but now being sentenced before trial. They see the potential for a bounce in a handful of these software names. Of course, the software stocks were sold off very, very sharply yesterday as a result of some of the new AI models that have come out. And this is a sector that has seen a lot of selling pressure and a lot of just downward, bearish sentiment over the last few weeks. We've seen a lot of rotation out of these names, and that accelerated yesterday. So now you do have a handful of analysts out on Wall Street saying that, oh, maybe this is primed for a near-term bounce, even if not over the longer term.
Jeff, thank you very much indeed. That's Bloomberg's Jeff Morgan. Up next, Brookfield Asset Management naming a new CEO, ending a 2-decade run for Bruce Flatt. We'll have more after the break. Brookfield Asset Management naming Connor Teskey as Chief Executive Officer, ending a 2-decade run for Bruce Flatt. Let's get more from Leon O'Day of Bloomberg News. Leon, thanks very much for joining us. Give us a bit of background on Teskey, what he brings to the table. He was being groomed for this role, was he?
Yes, so basically, Bruce Flatt now is, he remains chair of the board for Brookfield, but he also remains the CEO of Brookfield Corporation, the parent company. Basically, this plan was set in motion around 4 years ago when Brookfield was close to spinning out its asset manager. Brookfield then named Connor the president of Brookfield Asset Management. And Connor Teskey is at 38. He's considered one of the youngest executives to run a company of that size and magnitude. As we know, Brookfield manages over $1 trillion of assets. He basically joined the company in 2012, and he quickly climbed up the ranks. He ran the investment part of Brookfield Renewables until he was named the CEO of that unit in 2020. While he was focusing or tending to investments in Brookfield Renewables, he also came up with the idea for Brookfield to buy a majority stake in Oaktree in 2019. Of course, the deal turned heads in the industry, and it also was a very pivotal moment for Brookfield because it helped propel the asset manager to become one of the world's largest, and it also basically helped them become a key position them to become a key player in the credit space, but also it paved the way for them to enter the insurance race.
So it's the end of an era for Flatt at Brookfield, but as you say, he's not leaving the complex or the conglomerate altogether. What does this mean, though, for Brookfield Asset Management, this change at the top?
So Bruce will remain involved in Brookfield, of course, and he will now basically turn his attention to Brookfield Corp as it undergoes its own transformation because it wants to become an investment-led insurer.
This morning, the company Brookfield Asset Management reported earnings, and it did beat estimates on distributable profits. Give us a couple of highlights, if you would.
Yeah, so basically Brookfield said that they reported record earnings. Their distributable earnings, as you mentioned, increased, and it beat the estimates. It was their fundraising for the fourth quarter was a record as well. They gathered around $35 billion, the majority of which came from their credit strategies, but also from their AI infrastructure fund, which was launched in November. Brookfield is becoming a key player in providing capital for the AI infrastructure build-out, and they launched an inaugural fund in November in partnership with NVIDIA and with Kuwait Investment Authority.
Leon, thank you very much indeed for joining us. Leon O'Day from Bloomberg. Okay, and interesting that Brookfield Asset Management stock is down in the past year. I hadn't realized it had come under that kind of pressure. Coming up, earnings from AMD, Uber, and Eli Lilly. Two tied to the AI story, and one riding the weight loss boom, or at least doing a better job than Novo Nordisk. We'll have more after the break. Yesterday on Market Call, we were joined by Tim Regan, Managing Director at King West & Company, and he covered North American large caps. And here were his top ideas: Amrise, EQB, and GFL Environmental, the garbage collector. Today on the show, it's Cole Catcher. He is Senior Investment Advisor and Portfolio Manager at Wellington Altus Private Wealth, and he'll be taking your questions on North American stocks and ETFs. AI continues to drive gyrations in the market. Anthropic released a tool that can be used by lawyers, and that triggered a sharp sell-off in software names, companies that thrive on data crunching and letting companies interrogate databases. We already mentioned selling in Adobe, for example, and I see Constellation Software under a little bit of pressure. So let's get to some companies that are affected by this AI revolution. We are joined by Jamie Murray, Murray Wealth Group. Jamie, great to see you. Let's start off with AMD. Investors not delighted with that stock today. And of course, they are seen as a contender to provide devices for AI computing.
Yeah, I'm a little surprised by the reaction in AMD. It's not a company that we own right now. We prefer NVIDIA or Broadcom in the semiconductor space, but AMD's a solid third place competitor. And what the real catalyst for this company is their new MI400 chip series that's going to be launched in the second half of this year. And I think that's why most investors who are holding this and why we've seen some rally in the stock in the recent months are looking forward to. So these results, they're in line. There's a little bit of noise around China revenue maybe driving the outperformance. But I think overall, there's still healthy growth there and more opportunity for AMD to grab some market share over the next year.
Now, Uber down. The profit outlook didn't delight investors, and they've also promoted or named as their new chief financial officer an executive seen as an outspoken enthusiast for driverless technology, but that's going to be expensive. Of course, AI plays a role in that too.
Yeah, exactly. So Uber is kind of being hit on two different fears. I know you were talking about the Anthropic legal assistant agent. And so I think there is some concern with the companies like Uber and DoorDash on the agentic commerce, where maybe it's not going to be me or you booking our Uber through the Uber app. We're using an agent that's going to find us a ride share or meal delivery. So that's one factor. And then the other factor is the Waymo and Tesla autonomous vehicles. And there's questions around, is Uber going to be a beneficiary from these AV rollouts, or are they going to be disrupted if these two companies can go it alone and they don't actually need to partner with Uber? So Uber, the stock's come back up. It was down 10%. I think it's down, it's down 5%, I guess, now where I see. The numbers were, again, mostly in line. The mobility numbers were slightly light on the booking side. But the company did a really good job laying out why they think they're the partner of choice for autonomous vehicles. And it's really going to be a wait and see how this market develops over the next 2 years. If Uber can get more and more third-party suppliers of autonomous vehicles onto their platform, that's going to be great for the company, and the stock's probably a great value at this price. But if we just see only two other players, Waymo and Tesla, and it's really just Waymo right now growing the market, then that's going to continue to be an overhang for the stock.
And Lilly, of course, we're hearing about more and more competition emerging in the weight loss drug market. We've talked to Vimy a couple of times. They're a Canadian company planning to start selling generic weight loss drugs in Canada. Lilly, though, providing a forecast that Wall Street liked.
Yeah, Lilly's been knocking out of the park, and this all comes down to execution. So obviously Novo, I know you talked about the top of the show. Novo Nordisk, their big competitor in the weight loss market, is down significantly and down significantly over the last year. Lilly's stock price has pretty much gone the other way and seeing great results today. And this really comes down to Lilly's bet on manufacturing and distribution that they made a few years ago. When there's shortages of these drugs, they significantly ramped up distribution. And so now it's more of a volume game versus a price game. So the price of these drugs is coming down as it gets more competitive, but Lilly's taking more market share because they have the production and the volume to meet the supply.
Yeah, it's fascinating, but Novo Nordisk struggling. And Novo, as you probably know, is a huge part of the Danish economy. It drives economic growth in that country. It's almost a bit like Nortel became such a huge part of our stock market, at least. Jamie, what are you looking out for in the next few weeks from the market? Is there anything you think investors are underestimating in terms of impact?
I don't know if there's anything. I mean, we're still bullish on AI and the benefits. I think there's been a lot of shift to the risk that AI is going to pose to software companies, tech companies, anything that's not like a hard asset company has been under pressure, it seems like, over the last month. But I don't think the market's looking at some of the opportunities. Now, certainly there will be companies that get disrupted. I think it's mostly going to be in the automation space, where tasks that are very repetitive, very mind-numbing, boring tasks like that are going to get autonomous. An AI agent will certainly take those, but I don't think on the consumer side we're going to see that much disruption. Just from consumers really like choice. We want to pick what meal we're getting. We want to choose the hotel. We want to choose our experiences. I don't think humans are fully ready to outsource that. So I think there is some good opportunities in some consumer companies that will be benefit from AI being added to their products rather than disrupted from it.
Yeah, we just saw a company called VenHub open the NASDAQ, and they are opening automated stores. They vary in size, but they're like giant vending machines. I wonder, they say that it reduces crime. Maybe, I guess you'd need pickaxes to get the stuff out. It's interesting, though, hard to get labor, and so we may see that emerging as well.
Yeah, definitely. I mean, I think the automation on like robotics or automating, that's exactly where we're looking. So, I mean, the warehouse part is a big thing too. Autonomous vehicles, autonomous deliveries. These are going to be big themes over the next decade. And in terms of like things to look out for, so I mean, tonight we have Alphabet earnings. Obviously, that company's had a phenomenal run, and it's going to need to provide a strong outlook for 2026 to see that continue. And then Amazon tomorrow, and Amazon's those are our two top holdings in our global equity growth fund. So we're really looking forward to that, and particularly Amazon on the robotic autonomy side. They're one of the leaders in implementing these new robotics into their warehouses. Again, that's going to be another big theme, we think, over the next decade. These dark warehouses where it's more robots, more autonomy, less humans.
Jamie, thanks very much indeed. Jamie Murray, president of the Murray Wealth Group. Coming up, SpaceX is acquiring Elon Musk's AI startup xAI and valuing the combined company at $1.25 trillion. We'll have more when we come back. SpaceX is acquiring xAI, bringing Elon Musk's rocket and artificial intelligence companies together. We spoke with Jay Bala of AIP Asset Management.
The private markets is a market that investors need to take a serious look at. It's becoming a dominant force in the investment universe. Today we've got over 1,200 companies or 1,200 unicorns in the world. You've got about a combined 5 or 6 trillion AUM business there. And so, if investors aren't invested in pre-IPO companies, or, if you're sitting with your advisor and, you're looking at your portfolio and you don't have any exposure to pre-IPO companies, look, I think it's going to be a fair question to ask, why not? Why aren't we looking at this space? And, I think the merger of SpaceX and xAI creating the world's largest company, it wasn't born in a vacuum, right? Like, this has been happening for many, many years now, where you've seen, a significant amount of capital go into that world, whether that's through private equity, private debt, venture capital. So look, I mean, I realize the valuations look staggering, but this is no surprise to us. I mean, this is the first of many companies like this to come out of that space. And, I think over the next kind of 12 months, you're going to see companies like OpenAI and Anthropic also come, with these sort of mind-boggling numbers, right? I mean, I grew up in a world where, $1 billion was a lot. Now, we're looking at trillions, right? Which is a whole different number.
Okay, so this is ahead of, we talked about a planned IPO. What's the benefit for the IPO putting these companies together?
Yeah, I mean, look, if you think about it, he's bringing two technologies together. One is effectively the space launch capability, and the other one is through xAI. It's really that AI technology and the data warehouse, and then the data centers. And the whole idea being, he wants to create, or Elon Musk wants to create, these orbital data centers. And the idea being, it's going to be much cheaper from an energy perspective because you can use solar energy and other kinds of energy to power that. And so, look, I mean, obviously, it takes a very significant amount of capital to build all of this out. And so, look, I mean, I think obviously accessing the capital markets at this range with that kind of valuation is obviously beneficial to the company and to him, right?
Okay, so we're hearing a lot more about data centers in space. What do you think about the idea? You mentioned how much investment it would take. Clearly, it would take time, but the energy would be right there. What do you think about the idea?
I mean, at the end of the day, it's obviously groundbreaking, right? Like, meaning it comes with an incredible amount of potential, but it comes with an incredible amount of risk. And so, look, I mean, at the end of the day, that's the investment universe, right? People have to make that decision on thinking, well, are we going to do it in a measured way where you kind of build a small data center and then see if you can scale that and build that and grow that? And I think that's kind of the approach they'll be taking. So, I mean, I realize it sounds out there, but I think it's well worth the try. And if it works, it's going to work out incredibly well, right?
Yeah, he's got the money to do it. What about Tesla? Does this leave Tesla sort of stranded on its own?
I mean, if you look at the history of his companies, they're always intertwined, they're always intermingled, they're always doing investments through one another. And I think his investor base is a very strong, sort of loyal investor base. And so they're used to that. And so, I don't think Tesla's going to be abandoned in any way. I mean, if anything, I think you're going to see more and more transactions between Tesla and, new SpaceX.
But you don't think they'll come under one umbrella at any point?
I mean, you never know, right? At the end of the day, I think, we'll see. I mean, part of it is, I think if you merge them all, maybe that market cap becomes too big, right?
Just ahead, fresh jitters among investors in AI stocks. We'll get perspective after this. Welcome to the second hour of our show. Let's get to the big stories we're bringing you from the BNN Bloomberg newsroom. Brookfield Asset Management has named Connor Teskey Chief Executive Officer, ending Bruce Flatt's 2-decade tenure as boss of the asset manager. However, Flatt remains chair of the board, and he continues as chief executive of the parent company, Brookfield Corporation. Flatt himself says the move is a culmination of a succession process that began 4 years ago. The announcement came alongside Brookfield's fourth quarter and full year results, and the company says it achieved record results in 2025. Suncor beat fourth quarter revenue and profit estimates. The Calgary-based company had a record-breaking year as well. It achieved its 2024 Investor Day targets a full year earlier. The oil sands producer saw record upstream production, and refining throughput also climbed. It also posted record refined product sales, and the dividend is going up 5%. We're watching shares in Colliers today. The Toronto-based company has acquired Ramos Consulting, based in California, which provides management and engineering services for major public transit projects. Ramos' senior leadership will continue to oversee the transit business in California and become significant shareholders in Colliers Engineering. And there is a look at the TSX edging higher in trading today. Let's check in on the U.S. benchmarks. And we can see the S&P 500 drifting down about 0.4% and the NASDAQ down around 1%. So there are jitters yet again in the software sector. Some investors fear AI will undercut the business models of companies that supply code, databases, and IT services. The fears were heightened yesterday after Anthropic released illegal software tools using AI. Let's get perspective from Laura Lau, Chief Investment Officer of Brompton Funds. Laura, thanks very much indeed. I mean, close to home here, CGI, Constellation, OpenText, Descartes, all of them have seen pretty sharp declines in the past year. Now, perhaps not all of that is due to AI fears, but it's definitely a trend.
Yeah, so what we're seeing is, before AI, investors loved software companies. They had high growth rates, high recurring renewal rates, growing addressable markets, big moats. But as a result of that, they also had high multiples. So we're seeing that being disrupted by AI. And it's really shoot first and we'll ask questions later. So what investors are, anticipating is that, growth rates will slow. They're questioning what the addressable market is. They're seeing more competition. What are these renewal rates? Are these moats real? So what I think that a lot of these software companies need to do is incorporate AI more. They have to use AI to develop software more efficiently, and they have to articulate that because they're going to be beneficiaries of that because software programming has changed over time and become more efficient. And now we're worried, as you said, more about the business model. So a lot of them licensed by the seat. Or will it be by usage? And will there be fewer seats because you're so efficient, you'll have fewer employees? Will they be using AI to build the software? So just to give you context, I used to be a software engineer and a software project manager. So far what we can see is AI can be used to build simple software, throw away code, but you're not going to use these for mission critical software. It's just too dangerous. So we've seen what happens when the software doesn't work. And the other thing is when you generate code with AI, it can be different every time. Do you want to retest that? Do you really want to update a database with that kind of information? And smaller companies, are they going to replace Microsoft Windows or Office with AI? No, maybe with Google's Office suite, but not really with AI. So it's going to be very interesting to see what's going to happen. And we're seeing there's also more competition. What I mean by that is, for instance, Adobe. They have competition in Canva, but they also have competition with these new AI startups. So we're going to see more and more of that. It'll be easier to start an AI company. So, for instance, Intuit, many people use their TurboTax. So are they going to be using, chatbots or AI to do their taxes? I'm not. It's not ready yet. Or QuickBooks for businesses. Chances are they're not ready yet. But on the fringes, people are worried. So it's a lot, I think of this a lot like what ESG, environmental, social governance, did to oil companies. Oh, we're never going to use oil again. It was overdone, but it took a long time for people to figure that out. And I think something similar will happen. So what we're seeing happen is a lot of these software, it's called software as a service, SaaS. So it's being termed the SaaScopolis. So, apocalypse for software companies. I don't think it's quite that way, but I do think software companies have to offer more value to their customers.
Just looking at Adobe, I know we just looked at the chart. I'm checking out a 5-year chart here. It's dropped. It did slide in early 2022, Adobe, and it's pretty well back to that level now.
Yeah, so a lot of it has been more competition from Canva and Microsoft, a lot of other companies. So we're seeing that happen.
Give us your take on Suncor, record production, although that had been pre-announced. Is that an energy stock that interests you these days?
Yeah, so Suncor, since Rich Kruger came on, he's done a fantastic job improving operations. So he had a 3-year plan, all these targets. We're going to decrease break-even oil prices. We're going to, increase free cash flow. So he's achieved that a year ahead of time. So what everybody will be watching is March 31st will be Investor Day. What will be the new targets? Because he's over-delivered, so everybody's watching for that. And how much more can he improve operations?
Yeah, my screen is showing Suncor has actually hit a record high today, Laura. eclipsing its level of 2008. And of course, around then, oil went to $130. So certainly Kruger has delivered for investors.
Yeah, he's done a great job delivering. And the other big concern in the market is Venezuela. Will Venezuela be able to increase oil production? They will, and they will be backing out some of the Canadian barrels. But Suncor is very integrated. They have their own refineries, so they will help offset that issue.
Just give us your thoughts quickly on Uber, if you would, Laura. Sorry, we're tight for time. People do seem wary of heavy spending on self-driving cars.
So the big story is self-driving cars. We're seeing Waymo. We're seeing, a lot of competition for self-driving cars. Their new CFO is a big proponent of self-driving cars. So we expect a lot more to be spent and concentrated there. They're going to be launching likely 10 markets with self-driving cars. So it'll be a very competitive space to watch. So will that, more capital spending, will that impact margins? So everybody's watching that, and there'll be new competitors coming on as well.
Laura, always great hearing from you. Thank you very much indeed. Laura Lau, former software engineer and now Chief Investment Officer at Brampton Funds. Still ahead, Novo Nordisk warning of trouble ahead amid more competition in obesity drugs. The chief executive spoke to our Bloomberg partners, and we'll bring you that conversation. Looks like investors are increasingly disenchanted with Novo Nordisk, the giant Danish pharma company best known for Wegovy, its obesity drug. The CEO joined Bloomberg's Francis Lacroix to discuss the company's outlook as it faces headwinds on its main obesity and diabetes drugs. The executive tells Bloomberg Television that he's confident that, quote, the volume buildup will happen. Let's have a listen.
We have been speaking to the investors, trying to explain that in order to expand market, and we need to expand market in our business, we need to reduce the prices. So we increase affordability. Of course, it was well publicized that in the US, the prices from a very high level were coming down within the GLP-1. Our company is quite concentrated compared to many other pharma companies within the GLP-1 segment. So when you, of course, get a pricing headwind on your GLP-1 products, Wegovy and Ozempic, you feel the pressure of that more. But also on the back of course, being a focused company and being the best in what we do, we feel very confident that the volume buildup will happen script by script, and we have seen the early signals of that with our Wegovy pill launch. So I'm very hopeful that while we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
So you're basically saying, look, trust us until this happens, right? Until the volume uptake makes up for the price decreases. When? Is it this year? Give us a timeline of when you think you'll see that turn.
I think what most people would recognize with diabetes and obesity, this is a condition that unfortunately affects billions of people. Close to 2 billion people have diabetes, obesity, and overweight. Everyone also knows that together with our competitor, we are only treating some 20 million of these billions of people. Everyone notices that GLP-1 market as a segment is growing, and we have been able to actually show that we can take part of that growth. This year we'll be growing once again, and we'll be producing more than ever before, treating more patients than ever before. But of course, when your base gets repriced in United States and US is some 55% of our business, you will basically see the headwind and the result of that within 2026. I am much more hopeful as we pass through this period that the volumes will compensate for the price decrease that you've seen.
I mean, given where we are now, can you rule out another round of layoffs?
We don't have any plans of mass layoffs, but I also tell our own employees as well as the external world that we are readjusting our business as we go forward. And as a result of that, in pockets of the company, we will be hiring more. I think right now, currently, we have some 400 open positions, but there are other parts of the business where we are reducing our capabilities. So that's business as usual. What you saw last year with 9,000 employee cuts is not in the plan for 2026. And as long as we grow and make more patients into our products, come into our products, then of course it's more of an upside than a downside when it comes to headcounts.
And this would be for the whole year, so you're basically ruling that off, even if the uptake in volumes could take longer than expected.
I am right now looking at the first early signs of volume uptake. That's our Wegovy pill that after 4 weeks has been given to 170,000 individuals. If you put that in the context, that's 2 times more than tirzepatide did in their first month of launch, or 15 times more than when we brought Wegovy injectable. When I see volume uptakes like that, I get encouraged about the longer-term future.
Do you worry that the oral Wegovy could cannibalize the Wegovy injection?
The early signals are that some 88% of the patients that are coming into Wegovy pill are buying the lowest dose, the 1.5 milligram of the product. That's a very strong signal to us that these are new patients and not those who are coming from the injectable ones. There could be some small cannibalizations, people who need, to take a pill instead of an injection. But I would say a lot of people have been waiting to use GLP-1s. But injectable was not the path they wanted to take. Wegovy pill gives them the same efficacy as the injectable Wegovy at 16.6% weight loss. So we're seeing a very good uptake of these new people coming in.
Do you feel confident that Novo can compete in the long term, in the long run, without a monthly obesity shot?
Absolutely. First of all, we do have monthly products in our pipeline, and we will share and show that in due course. But more importantly, I feel that Novo Nordisk, by being a focused company, probably has the best pipeline right now in the industry. And we also have manufacturing skills second to none. 2 things that many of the new players coming into this market sometimes underestimate. And then we have the commercial capabilities, and we are very quickly learning how to mass product these GLP-1s via our partners. So I feel very confident for the building blocks that Novo Nordisk is building the future.
Mike, I know there's a lot of hope for CagriSema. How confident are you that you'll get the right trials? I think we're expecting something quite soon on that. And how easy would it be then, if you do get the right approvals and the trials go well, to scale it up?
So we have filed for approval, and we hope to get that approval later on this year. That would make the CagriSema launch early next year, and perhaps the first amylin molecule, combined molecule, that will hit the market. So once again, testament to Novo Nordisk innovation powerhouse that it is within this area. It's a fantastic drug that I'm looking very much forward to, with the highest efficacy than any other product today marketed. So that's, of course, incredibly exciting. And more to that, we will try to make that the best launch again, only surpassing what we've done now with the Wegovy pill.
That's Novo Nordisk's CEO speaking to Bloomberg's Francine Lacqua. It's interesting. Over the past year, Novo Nordisk shares have slid more than 40% in U.S. trading. However, Lilly stock is up about 31%. And we're going to get more on Lilly's rally. The shares are surging again today after the break. Eli Lilly shares moving sharply higher after the drug maker posted a strong fourth quarter and issued a revenue forecast for 2026 that topped expectations. Let's get more from Ilya Zubkov, a senior equity healthcare analyst at Capital Markets Research. Thanks very much for coming on the show.
Good morning.
if I could start off with a kind of obvious question, what is Lilly doing right that Novo Nordisk is not?
You're right. It's difficult to identify any material weakness in Eli Lilly's quarterly results or guidance. So both sales and EPS were exceptionally strong, exceeding company guidance and street expectations. Lilly keeps the dominance on the GLP-1 market in the US. I think this is the biggest thing it can put on the market, rivaling with Novo.
And how is it doing that? How is it I mean, obviously, Lilly has been around the U.S. drug market probably for longer, probably has deeper connections. But how is it maintaining dominance in the U.S. market?
Yeah, I think that the main thing here is that Lilly is trying to take as much patients as it can from the U.S. market, and it is very good in that. So we have a very broad pipeline in terms of different applications of the existing drugs on the market and the future entrants. I mean, the orforglipron, for example, that we anticipate to enter the market by the end of Q2. And of course, Zepbound and Mounjaro continues represent strong momentum that will be augmented with the new entrants by the end of the year. And I think that's the key differentiation point there.
And what is that drug you refer to, or the names they give them, orforglipron? What is that drug?
Yeah, so this is a tableted version for treating patients for weight loss. Novo already has its tableted version for weight loss drug on the market, and Lilly is not so far behind in the timing. So I think Novo can have some momentum in the beginning of the year, but Lilly's presence is much stronger in the US. And of course, we know that it builds up the manufacturing capacity very actively, investing capex into new manufacturing facilities in the US, building basement for further expansion of the volume of the sales. And so orforglipron is just another brick in this building.
And so this drug is a once-a-month pill formulation, which is obviously convenient for people.
Right, and it closes the gap between the drug manufacturing and the patient. So this is the way how Lilly can access more patients. For example, some patients are not okay with needles. And this drug is a more convenient way to take GLP-1 and to achieve their goals in weight loss. So this is just a differentiation point that helps expanding the achievable market.
And from what I'm seeing, this new drug could be relatively cheap, around $350 US a month. How are they? Will that not eat into profit margins, though, if the product has a lower price?
So you're right. The pricing issue is a big theme in this area, and here we have a differentiation between different ways to treat obesity and price is likely to continue declining with the volume growth. And here's just another way to put something on the market. But the pricing now is more predictable as US government net prices are set and ex-US prices will be stable. We can see continued price deflation in commercial segment and direct-to-consumer channel, and competitors' pricing can pressure. So it is price game also. So we expect modest price deflation that management is guiding for 2026. We expect it will persist in the midterm. So I think that this trend will persist, and we should take it as a base case scenario.
It's interesting. Apparently, the highest use is in the United States is for people between the ages of 50 and 64.
Yeah, so this is probably the most lucrative population. And here we can recall the fact that we anticipate Medicare population unlock. And this is another key catalyst that can materially improve the view for the prospects of sales growth for Eli Lilly. And unlocking the Medicare population that you've just noticed, it can really help to unlock a commercial uptake as well.
Thank you very much indeed for joining us, Ilya. Ilya Zubkov, Senior Equity Healthcare Analyst at Capital Markets Research. Coming up, shares in Thomson Reuters, once seen as the perfect blue chip stock, took a big hit yesterday on fears that AI will help to undermine that business. The shares rebounding a little bit today. We'll get insight after the break. Well, let's get more on that sharp sell-off we saw yesterday across data and legal services stocks, software names, after the AI startup Anthropic released a new productivity tool aimed at speeding up legal work. We got more from Brooke Thackeray, research analyst at Global X.
There's been a lot of questioning about the whole narrative around AI, so it's sensitive to any changes, any news formations, or anything that comes out. We're seeing the NVIDIA as well going back and forth with OpenAI. So when you have an announcement by a company, it's everything else can really suffer from that. So it's just, I think investors are really skittish at this point. Is it an overreaction? Do we expect this to continue to go down? I think we're going to see. And I don't think continue to head down the same level, obviously, but I think we're going to go back and forth here and slowly work our way more into reality here.
It's kind of like, 2025 seemed like a year for a conversation about AI and what's going to happen with AI in the future. And it seems as though 2026 is like, okay, we've seen all that spending for AI. Now people are kind of looking for results. Is this results, do you think, what Anthropic was releasing yesterday?
I think that there's more to it than just the results at this point, because there's just all that skepticism that's around. Is this going to pay for it? Is there circular deals going on back and forth? And we, like I mentioned, we saw NVIDIA talk about, well, we're not going to give money to OpenAI. And then OpenAI come back and say, well, maybe we're not going to use NVIDIA chips. And that whole circular flow diagram that we've seen with Anthropic and everybody else going back and forth, that seems to be falling apart a little bit at this point.
It shows almost how vulnerable some companies are to any kind of this is quite steep competition. Obviously, this tool coming out, a lot of companies feeling that pressure now. It shows just how vulnerable companies are to competition.
Yeah, so if we go back and we take a look at with AI, everybody's saying AI is the future, and it is the future. But there's room for everybody because we're growing so fast, and it was growing so fast, and still is growing fast. And everybody can do well in the space. But now all of a sudden we're becoming more competitive here. And we've seen that with Google coming out with their TML chips versus NVIDIA as well. Oh, there's other chips. NVIDIA doesn't have the only chips. And so we're seeing with Anthropic as well, all of a sudden producing different platforms where now it's more competitive. And I think we're in that stage where we're seeing more fiscal responsibility, more competition come in. So we're going to see these reactions. I don't think it's going to all of a sudden keep continuing heading down here. But I think we've seen the best of the rapid rise around the AI stocks.
It was interesting, though, the reaction, right? And we kind of saw the ripple effect of that throughout the markets. I'm not sure if you noticed other sectors like the financial services and asset managers sectors. There was a ripple effect from the tech sell-off that we saw yesterday.
Yeah, there's no question. That's what happens because tech really tends to drive the market a little bit. It's a real beta sector. So when investors pull back from that sector, we see it spill over into other areas as well. And tech got hit hard. You look at Shopify, it got hit hard yesterday. It was down almost 10%. And it releases its earnings next week. It wasn't like it was coming out with big earnings or anything. So we saw it just ripple right throughout. And that's going to happen. Well, technology actually, as far as the S&P 500, makes up about 34% of the S&P 500. So it's a huge chunk from that standpoint, from a capitalization standpoint. However, there were sectors that did do well, for instance, in some of the cyclical sectors and the mining sectors, et cetera. So it didn't go out throughout the whole market. It did spill over, but it didn't hit absolutely everything.
So with that in mind, I mean, how should investors be looking at this? Like, should they be going to those sectors that weren't really touched by what happened yesterday? Or as you say, it's not going to be a long-term thing when we're seeing this sell-off of other techs?
Well, I think we're in a real generational change here a little bit. So I think, although I don't think we're going to see this big, huge collapse continue down, I do think we're going to see it whittle down. Technology has been underperforming since October.
Right.
And we're seeing this up and down here. And I think we're seeing a rotation take place. And that's why it's susceptible to these big, huge corrections that take place. We're seeing a rotation from the growth sectors of the market, particularly technology, into the cyclical sectors of the market. Investors still want to be invested. It's not like they're trying to leave the market. They're saying we want to be invested in other sectors. And I think that's going to continue. I expect the technology sector to continue to underperform. At this point, I think investors are still going to move into the cyclicals. And the big question is they're also going to move into the defensives as well. We saw the consumer staples sector up 1.6% yesterday, which is very interesting, a huge discrepancy with the technology sector. So it's saying that we're seeing this rotation take place, and it's just the market moving and investors moving. I don't think technology, as much as it's going to change the world, I think there's other places to be, and investors are now examining that, whether it's precious metals, whether it's some of the cyclical sectors like industrials.
Trying to diversify.
Yeah, we're seeing that broadening out. And more of a rotation, but we're seeing broadening out as well.
Blake Thackeray of Global X, the ETF crowd. Here's a look at Thomson Reuters stock over the past 5 years, and it's incredible. The shares, they peaked there at almost $300 last summer, July, and they've lost more than half their value since then. And we know one crowd who aren't happy to see that. The Thomson family. They own about 2/3 of Thomson Reuters and are among Canada's richest clans. Coming up, hot picks. We zero in on 3 small cap pharmaceuticals. Time for hot picks, and we are zeroing in on the small cap pharma sector. Our guest top pick is United Therapeutics. He believes this company could double its sales with a new drug targeting lung disease. We're joined by Terry Smith, a director of life sciences research at Emerald Advisors. Thanks very much indeed for coming on the show. Tell us about your first name. What exactly is United Therapeutics targeting?
Yeah, so United Therapeutics, they're a company, they're a $20 billion market cap. They have several drugs for lung conditions, but they have one that's most interesting. It's called Tyvaso. Tyvaso is an inhaled drug. It's approved for 2 indications already, but they recently had phase 3 data in something called idiopathic pulmonary fibrosis. This is IPF. It's a terrible lung disease. Patients generally live 4 or 5 years with this disease. There were 2 drugs approved about a decade ago for this disease, and they each did over $1 billion in sales. The drugs weren't well tolerated. They weren't taken for very long, but we believe Tyvaso can be a gigantic drug in this space, maybe $3 to $4 billion in peak sales if when they get approved. They have 1 phase 3 already in hand. They'll have a second phase 3 reading out in the next 2 or 3 months. It's highly likely to work, and we believe this could result in a doubling of sales. The stock trades at about 16 times GAAP EPS this year, and we think that's not very expensive when you consider the long runway they have ahead of them.
So they already have some profits?
They're already quite profitable right now.
Next company sounds really interesting, Axsome. They're working on a drug for major depressive disorder. It's actually been approved, but also they hope it'll show promise in Alzheimer's disease.
Yes, Axsome is a company that's on the cusp of profitability. They have a drug called Auvelity. It's approved for major depressive disorder, and it did about $500 to $600 million in sales last year. It's growing north of 50% a year. They're going to continue to grow in MDD, but the attractive thing is they have recently been given the green light by FDA to submit their application for Alzheimer's disease agitation. Alzheimer's disease agitation is, of course, in patients with Alzheimer's disease. There's only one drug approved in the United States right now with ADA. We believe this will be the second, and this will be further inflection in sales. Right now, looking at 50% growth in MDD alone, adding in another indication would be terrific for this. The nice thing about Auvelity is that they have date certainty on when there will be a generic. It's not until 2039, 13 years from now. This is the type of thing that Big Pharma loves to acquire when they have long visibility, multiple indications. Axsome also has a pipeline that they claim is $16 billion in peak sales. That's probably not probability adjusted. I don't think we're going to pencil in $16 billion in peak sales for this, for a $10 billion market cap, but they have a strong pipeline in addition to Auvelity growing really well.
I see. So it's not actually an Alzheimer's treatment. It treats that side effect of or
agitation
effect
associated with Alzheimer's, yes.
Right. And it's interesting. Axsome is a combination of two drugs, including bupropion, which is a well-established antidepressant drug.
It is. They developed this drug, and they actually had to show that it was better than the two independent components of the drug. And in the beginning, doctors were a little skeptical. Oh, maybe I could just use two generics and it would work the same. It's shown time and again that it isn't. There's a special thing about this formulation that makes this drug work better than the two individual components that it's made of.
And then tell us about your final company, Mirum. You say it's just turning profitable, and it might look expensive at around 9 times sales.
Yeah, Mirum is one of the best management teams in the small and mid-cap pharmaceutical space. They have a tremendous pipeline. They've been growing very well for the last several years. You can see the stock has done quite well, all on the back of a single drug called Livmarli. Livmarli is approved for 2 rare indications right now for liver diseases. They're about to have a third study that's kind of a basket study, studying a variety of liver diseases to get a third group of patients on drug. But what really has me excited about this company is a second drug that's targeting 2 liver diseases. One is called primary biliary cholangitis, and one is called primary sclerosing cholangitis, PBC and PSC. There's nothing approved for PSC. It'll have phase 3 data reading out in probably the April-May timeframe. The company says that these 2 drugs in aggregate could be $1 billion in sales. I believe they could each be $1 billion in sales. And they're doing a really neat thing with the PSC trial. Nothing's been approved by FDA because FDA hasn't been able to agree on what are the short endpoints people need. FDA wants to see things like liver failure or liver transplant. Those trials take forever. As a result, no one's been able to get anything across the goal line. Mirum has done a really smart thing. These patients have tremendous itch, like want to rip your skin off itch. So they're actually going to treat itch associated with PBC and PSC, which is a clear read into patients' quality of life. Patients have really good compliance when they have something that is affecting the symptoms of their disease. And Mirum also recently acquired a company called Blue Jay that is making a drug for hepatitis Delta. We believe that's going to have a phase 3 that's also a positive readout this summer. So we're looking at 3 or 4 positive phase 3 readouts in the next year on top of an already profitable base business.
We'd better jump. Thanks very much, Terry. Those are 3 fresh names.
Thank you.
Terry Smith, Director of Life Sciences Research at Emerald Advisors. Coming up, Uber and Eli Lilly posting numbers. Investors delighted with Lilly, but Uber, not so much. AI continues to drive the market. Anthropic's release of AI tools for lawyers triggered a sharp sell-off in data, software, legal tech stocks. We got more from Jamie Murray, president of Murray Wealth Group. We kick things off with one company right at the center of the AI revolution, AMD.
I'm a little surprised by the reaction in AMD. It's not a company that we own right now. We prefer NVIDIA or Broadcom in the semiconductor space, but AMD's a solid third place competitor, and What the real catalyst for this company is their new MI400 chip series that's going to be launched in the second half of this year. And I think that's why most investors who are holding this and why we've seen some rally in the stock in the recent months are looking forward to. So these results, they're in line. There's a little bit of noise around China revenue maybe driving the outperformance. But I think overall, there's still healthy growth there and more opportunity for AMD to grab some market share over the next year.
Now, Uber down. The profit outlook didn't delight investors, and they've also promoted or named as their new chief financial officer an executive seen as an outspoken enthusiast for driverless technology. But that's going to be expensive. Of course, AI plays a role in that, too.
Yeah, exactly. So Uber is kind of being hit on two different fears. I know you were talking about the Anthropic legal assistant agent. And so I think there is some concern with the companies like Uber and DoorDash on the agentic commerce, where maybe it's not going to be me or you booking our Uber through the Uber app. We're using an agent that's going to find us a ride share or meal delivery. So that's one factor. And then the other factor is the Waymo and Tesla autonomous vehicles. And there's questions around, is Uber going to be a beneficiary from these AV rollouts, or are they going to be disrupted if these two companies can go it alone and they don't actually need to partner with Uber? So Uber, the stock's come back up. It was down 10%. I think it's down, it's down 5%, I guess, now where I see. The numbers were, again, mostly in line. The mobility numbers were slightly light on the booking side. But the company did a really good job laying out why they think they're the partner of choice for autonomous vehicles. And it's really going to be a wait and see how this market develops over the next 2 years. If Uber can get more and more third-party suppliers of autonomous vehicles onto their platform, that's going to be great for the company, and the stock's probably a great value at this price. But if we just see only two other players, Waymo and Tesla, and it's really just Waymo right now growing the market, then that's going to continue to be an overhang for the stock.
And Lilly, of course, we're hearing about more and more competition emerging in the weight loss drug market. We've talked to Vimy a couple of times. They're a Canadian company planning to start selling generic weight loss drugs in Canada. Lilly, though, providing a forecast that Wall Street liked.
Yeah, Lilly's been knocking out of the park, and this all comes down to execution. So obviously Novo, I know you talked about the top of the show. Novo Nordisk, their big competitor in the weight loss market, is down significantly and down significantly over the last year. Lilly's stock price has pretty much gone the other way and seeing great results today. And this really comes down to Lilly's bet on manufacturing and distribution that they made a few years ago. When there's shortages of these drugs, they significantly ramped up distribution. And so now it's more of a volume game versus a price game. So the price of these drugs is coming down as it gets more competitive, but Lilly's taking more market share because they have the production and the volume to meet the supply.
Yeah, it's fascinating, but Novo Nordisk struggling. And Novo, as you probably know, is a huge part of the Danish economy. It drives economic growth in that country. It's almost a bit like Nortel became such a huge part of our stock market, at least. Jamie, what are you looking out for in the next few weeks from the market? Is there anything you think investors are underestimating in terms of impact?
I don't know if there's anything. I mean, we're still bullish on AI and the benefits. I think there's been a lot of shift to the risk that AI is going to pose to software companies, tech companies, anything that's not like a hard asset company has been under pressure, it seems like, over the last month. But I don't think the market's looking at some of the opportunities. Now, certainly there will be companies that get disrupted. I think it's mostly going to be in the automation space, where tasks that are very repetitive, very mind-numbing, boring tasks like that are going to get autonomous. An AI agent will certainly take those, but I don't think on the consumer side we're going to see that much disruption. Just from consumers really like choice. We want to pick what meal we're getting. We want to choose the hotel. We want to choose our experiences. I don't think humans are fully ready to outsource that. So I think there is some good opportunities in some consumer companies that will be benefit from AI being added to their products rather than disrupted from it.
Yeah, we just saw a company called VenHub open the NASDAQ, and they are opening automated stores. They vary in size, but they're like giant vending machines. I wonder, is that they say that it reduces crime. Maybe I guess you'd need pickaxes to get the stuff out. It's interesting, though, hard to get labor, and so we may see that emerging as well.
Yeah, definitely. I mean, I think the automation on like robotics or automating, that's exactly where we're looking. So, I mean, the warehouse part is a big thing too. Mm-hmm. Autonomous vehicles, autonomous deliveries. These are going to be big themes over the next decade. And in terms of like things to look out for, so I mean, tonight we have Alphabet earnings. Obviously, that company's had a phenomenal run, and it's going to need to provide a strong outlook for 2026 to see that continue. And then Amazon tomorrow, and Amazon's those are our two top holdings in our global equity growth fund. So we're really looking forward to that, and particularly Amazon on the robotic autonomy side. They're one of the leaders in implementing these new robotics into their warehouses. Again, that's going to be another big theme, we think, over the next decade. These dark warehouses where it's more robots, more autonomy, less humans.
Jamie Murray joined us earlier. Let's take a quick look at the markets before we go. In the fleeting moments we have left in the open, there is the TSX higher. Today, we did see a rally this morning in gold prices, and that's always favorable for Toronto. One stock that investors are buying into right now, ATS Corporation, arguably the kind of company Canada needs to pull out of this productivity slump, based in Cambridge, Ontario, and it designs and builds systems for automating factories. It's got 7,500 people, 65 manufacturing facilities, North America, Europe, Asia, China. Anyway, they came in with consolidated revenue that was up 17% year over year to north of 760 million. Investors like the sound of that. Maxim Sichev, the analyst at ATS Corporation, at National Bank Financial, he's talking about ATS, says Doug Wright, the new CEO, has only been around for a few weeks, but investors like what they're hearing about diversifying revenue and converting the improving balance sheet into M&A possibilities. A couple of other stocks of interest here. Brookfield Asset Management appointing Connor Teskey as CEO. He was expected to get that job. The current long-time incumbent, Bruce Flatt, is going to remain chair, but he also stays CEO of the parent company, Brookfield. And profit at Brookfield Asset Management topping expectations in the latest quarter. And Suncor trading at a record high today, even eclipsing the peak in 2008 when oil got up to around $130. There was a modest cash flow beat in the latest quarter, according to Raymond James, and production, which had been pre-announced, hit a record high, north of 909,000, almost 1 million barrels a day, a record high, up about 4%. And Colliers, not just real estate, but also in engineering and investment management, announcing an acquisition of a California-based company that helps manage big transit projects. And that comes on the heel of yesterday's acquisition of a Spanish engineering firm for $700 million US. Thanks very much for watching our show.